Assalamu alaikum. I am Khadija Tujura welcoming you all in the second class of chapter 9. Today we are going to discuss principles of banking business. There are so many principles of banking business. Along them we are going to discuss 12 main principles of banking business. Principle of security. An important principle in banking is ensuring the security of clients' money and the money that has been given as loan. Before sanctioning loan, a bank should evaluate the financial solvency and honesty and then keep security against the loan. Principle of profitability. Earning sufficient amount of profit is another principle of banks. For earning profit, banks provide lower rate of interest to the depositor but charges higher rate of interest to the borrowers, and the difference of these two rate there is the profit of bank. Liquidity principle. When a depositor wants to withdraw money from the bank account, the bank is bound to pay the amount in cash on those moments. Again, if the bank keeps a maximum portion of deposited money as liquid, it will lose its investment capacity and cannot earn profit. So, proper banking business means maintaining a reasonable amount of liquid asset so that the bank can satisfy both its customer and the borrower. It is one of the most important principles of bank because maintaining the liquidity and the profitability is a very tough work. Financial solvency. Due to lack of financial solvency, a bank may become bankrupt. So, principle of financial solvency is a very important principle of banking. Principle of efficiency. Success of business mostly depends on the efficiency of board, officers and staffs involved in the management. In this competitive world, efficiency is a very important principle. With this principle of efficiency, bank can earn profit more and more correctly. Principle of providing services. Providing different kinds of services to clients is an important responsibility. Because of these services, development of bank has become possible and trust of customers has become also possible with the principle of providing services. Banks which provide more services, customers are more attracted with those banks. Principle of secrecy. An important way of earning trust of the clients is keeping all the information of clients secret. So it is an important principle to keep privacy. Banks should not open the information of one customer to another customer if the customer's relative is also want to know that. Principle of development. Besides making profits, another important principle of banks is to help and support in the development of economy of the country. Principle of investment. The principle that is followed while taking investment decision like size of investment, duration of project, rate of return from its project, etc. is called the principle of investment. Success of business banks mostly depend on appropriate principle of investment because when appropriate investment is done, profit is also reasonable and banks also achieve success. Principle of economy. High profit with low cost is an important principle of banks, and this profit maximization can be achieved through cost minimization, and this is called the principle of economy.
এখন সময় রাত 12টা।
Principle of trust. A precondition of effective banking business is clients' trust on bank. Depending on this trust, customers keep their money and valuable assets in the bank. So, achieving trust is very important for banking business. Principle of cautiousness. It is an essential for bank to use the principle of cautiousness in the case of investment so that uncertainty and risk can be avoided. Because if one project is very risky, then there is a possibility of huge loss, and if bank has to face huge loss, it cannot meet the customer's demand and or can lose their customers' trust. So principle of cautiousness is very important for banking business. Banking business can be classified on the basis of different perspectives, which will be discussed in our next class. In this class, we are just going through it. Structural classification, functional classification, classification by business organization, classification by ownership, regional classification, classification by registration, classification by specialized clients, classification by control, banks on basis of religious ideology. In our next class, we will discuss about structural classification, functional classification, and some other important classification from this. In this class, we are also going to discuss about structural classification of bank. Structurally, bank has 4 classification: unit banking, branch banking, chain banking, and group banking. First one is unit banking. If banking activities are operated only in a specified location, it is called unit banking. Unit banking has no branch. In one office, all the banking activities are done. In Bangladesh, there is no tradition of unit banking. Second one is branch banking. If a bank functions by opening one or more branches within or outside the country under a head office, it is called branch banking. The branches have no separate entity and they function under directives and control of the head office. For example, you can say that Sonali Bank Limited, Janata Bank Limited, etc. are branch banks. Chain banking. When each branch developed through joint ownership operates on the basis of individuality following centralized instructions, it is called chain banking. The main objective of chain banking is to serve each other's interest. In Bangladesh, there is no chain bank. Group banking. When 2 or more banks join together and are directed and controlled under a holding company, this banking is called group banking. In such a bank, a larger bank purchases shares of weaker bank. As a result, the weaker bank becomes the subsidiary of the larger one. In this, the large bank is called holding company, and the weaker banks are called subsidiary bank. That's all for today. In our next class, we will discuss about the other classifications of bank. Thanks for watching the class, and if it is useful to you, you can share it.